Greetings, guys. Joseph James here once again with your nightly newsletter, brought to you by theschooloftrade.com. Today was November 19th, 2009. Guys, one of the best days we've had in a couple months today in our live trade room today. We'll go over that in a little bit. I want to remind you guys about our free resource online. Head to our YouTube page. That's / School of Trade. While you're there, please subscribe to our YouTube channel. That we get all the new videos. Don't forget to rate and comment on this video. And then if you're watching this video on YouTube right now, right below this video in the description of it, you'll see a link for our track record. So grab a copy of the track record, just follow that link. Let's talk about our trade room totals for today, guys. Again, had the biggest day of the month, pretty much the biggest day we've had in the last 60, 90 days here. Just shy of $1,200 in the room today. 112 ticks on 4 contracts, 4 trades. That brings our weekly total here, guys, to 2450. Our monthly total is 6245, and we are averaging well over $500 in the month of November. The term of the day today is mental versus physical stops. Now, these are both very important key terms here. We use this term mental versus physical stop all the time in our live trade room. What is it, though? Well, of course, we all know, guys, that we're going to always use a protective stop loss to protect against unexpected moves in the market, right? If it's out of your control, whether or not your charts jam up on you, the market starts really running very violently in one direction, well, we always use a physical stop. And for example here, I'm going to use a physical stop of, say, 6 ticks. It's placed in the market for protection. It's not used as your exit strategy. Now, guys, this is one of the most important things I want you guys to be aware of here. If you learn one thing today, that is your physical stop should not be your exit strategy. Okay, your exit strategy needs to be based upon watching the market and looking for the feedback. We use a mental stop, such as 4 ticks back, as a level where the trade becomes invalid. We rarely ever see a -4 trade reverse and then go all the way back up and say +4, +8 and make it a huge winning trade. So I'll use my physical stop, 6 ticks. That's my worst case scenario. That's my safety net. If something goes wrong, the stop takes me out of the market. But I don't want to use that as my exit strategy. My exit strategy is not a specific number of ticks. My exit strategy has to take into account the feedback from the market. So now we talk about that feedback. What is the feedback? I know to use my mental stop by watching price action and looking at my indicators. Now, we use what we call a trade management chart. We manage all of our trades using this very fast time frame. We have a couple key indicators such as the MACD, momentum, and the pace of a tape indicator. All 3 of these indicators we're looking for when to pull the plug and get out of that trade, right? To exercise your mental stop. So we look for a combination of the MACD, the momentum, and the pace of a tape. Now, it's pretty simple. We use these 3 indicators to get us into a trade. Okay, so for a long trade, a MACD indicator should be pointed up. The momentum indicator should also be pointed up. And for that trade, I want to make sure the pace of a tape is green, which means fast speed of the tape. Now, my mental stop comes into play when I see the exact opposite occur on my chart. So my MACD now for a long trade will curl and point down below the 0 line. My momentum indicator for a long trade will now curl and point down against my long trade, and that pace of a tape indicator will begin to slow down and turn to red, which means slow, sluggish price action. So if I'm in a long trade, MACD goes below the 0 line, momentum curls and points back down, and the pace of a tape shifts from green to red, well, guys, that's all I need to feel confident getting out of that trade. And of course, we use that mental stop so that this will only cost us 2, 3, or 4 ticks rather than a full 6-tick stop loss. And again, guys, tomorrow morning, actually tomorrow we're closed. Tomorrow on Friday, we'll be in Las Vegas for the Traders Expo. So Monday morning, we'll be back in the trade room. So come out and join us on Monday morning at 7:45, and we'll show you guys how we use these mental stops. It's a very aggressive, with your defense approach to managing your trades, and it obviously tries to maximize your winners and minimize your losses. So Monday morning, 7:45 a.m., come out and see us for that. Don't forget, next Tuesday, we have another webinar at 11:30 Eastern Time in the live trade room. Grab a copy of the beginner's course. If you guys haven't grabbed a copy yet, the beginner's course is the who, what, where, when, and why of how we trade in the room. And of course, we'll be closed on Friday tomorrow, reopening back up on Monday. Now, we had a great day in the market today, guys. Let's take a look at some of the trades we took today. Now, we had seen a very difficult market in the pre-market, choppy, slow. We had jobless claims at 8:30 that really didn't do very much for our volume. But we did have kind of a sweet spot between 9:30 and 10:30 today, between nat gas inventories at 10:30 and the U.S. Open at 9:30. We got started here, guys, at the first trade of the day here. The first trade here today on the gold. First two trades were on gold. The last two trades were on the crude. And the first trade today here, guys, was just after the U.S. Open. We began to see some good volume, and the short-term trend began to drop. We dropped below the previous close at 37.5, and we began to see the short-term trend drop. Now, at this point, guys, we had a red line here. It's been recalculated now, but the red line was right there at 35.6. So we had 35.6 was a major level of support. It's different now because it's been recalculated. But basically below that 35.6, you'll see a swing low here. That swing low here at 35.4, when we break below that swing low, right, there's our breaker pattern short. We entered at 953. The fill was at 35.2. We took targets of 4 ticks, 8 ticks, and then 15 ticks for a total of 31 ticks there, guys. $310 at $10 per tick. And on this particular trade, if you were watching with us this morning, we knew exactly where to place our third and final target. We placed it just above this trend line. We had the low of the day here at 33 even. And as you guys can see, we pretty much grabbed every possible tick out of that move for 31 ticks total. We weren't done there yet, though. We weren't done there. We had another trade to keep going on gold. It wasn't long thereafter, guys. About an hour later here on gold, just after the nat gas number at 10:30. Again, we watched as the gold market, we had the short-term trend being down. Short-term trend was down. We had an important level of support here at 1133, right? 33 even. That was the low of the day. That was the current low of the day, right? The current low of the day, as well as an important major support and resistance level there at 33 even. So we had the red line and the low of the day here at 33 even. We then broke below it, made our swing low right here. This swing low at 32.4. We broke below the swing low, and there's your breaker pattern to the short side. This, of course, happened at 50 minutes past the hour of 10 o'clock. Entry here was at 32.2. We took 4-tick target, 8-tick target, and then trailed our stop for that runner for an extra 16 ticks. That's 32 ticks on this second trade. So 31 ticks in the first trade, 32 ticks on the second trade. And as you guys can see, we managed these trades with perfection, knowing exactly how far to let them run, taking our targets off when we needed to, and managing the trade according to our rules. As always, guys, follow our rules, and our rules will make us money. Now, we weren't done there yet, guys. We had made over 64 ticks there on the first two trades. We were well over $600 at this point. We were still looking for some trades, though, here now on crude. We had nat gas inventories come out at 10:30. Nat gas being a finite energy resource, oftentimes will get crude oil going as well. Again, here we go. Short-term trend here was up. Now, we had to worry about here, guys, a big round number here at 78 even. Okay, big round number, 78.00. So we had to make sure that we had enough room to get into that trade with enough room to get the profit targets filled. We had a swing, right, a level here at 77.89. Our swing high, of course, above that 89 was here at 94. We then broke above 94. As you guys can see, 94, 78, there was exactly, right, 6 ticks, exactly 6 ticks of room, exactly what I needed to see as my bare minimum. We saw momentum up, nice strong green pace of a tape, and at 23 minutes past the hour, we got long at 96. We took 5 ticks for the first target, 8 ticks, second, trailer stop for 4, tying up 22 ticks there, guys, $220, $10 a tick on the crude for our first trade on crude of the day, our third trade overall. We weren't done there yet, though. At 11:33, I was talking about how whenever we see price break to the upside like that, I'm going to wait for it to test the next level of resistance and then look to sell that level of resistance. So at this point, we had already seen the market start to jump. We made 22 ticks there on that move at 94. We then, of course, waited to see the next level of overhead resistance. Overhead resistance was up here at 78.25, 78.20. As you can see, the buyers tried to keep poking, right? They tried to break this thing above the 20 level, but they failed. And whenever I see that double top like that, mark that swing low. The swing low here at 78.10. Once we, of course, broke below that swing low, there was our 2-step short. Another big winner here, guys, +4, +8, +9, tying up a total of 27 ticks there. That's 22 ticks in the first, 27 ticks on the second, 49 ticks on crude this morning, guys. And, of course, add them all up, and there's your 112 ticks across the board on both gold and crude. And as always, guys, let's recap. Live Trade Room opens up tomorrow morning at 7:45 a.m. Eastern Time. Don't miss a tick of that. We'll grab a free 3-week trial as part of our trial, guys. Grab a copy of the beginner's course for tomorrow morning. On Monday morning. And then please rate and comment on this video. If you want more information about our lifetime membership, guys, we charge no monthly fees. It's a lifetime membership. Drop us an email, sales@schooloftrade.com. My name is Joseph James. Hope the video helps. Don't miss a tick. Bye-bye for now.